But let's stick to some of the earnings that are in focus. In fact, let's get our first corporate conversation of the morning going. Pharma major Dr. Reddy's posted a set of numbers which was largely in line with the estimates for the fourth quarter. However, the street is worried about the base business performance and, of course, what's happening with the company's U.S. sales, which were slightly below street estimates, you can argue. Erez Israeli, Chief Executive Officer at Dr. Reddy's Labs, is now with us to discuss the performance in the fourth quarter and, of course, the outlook ahead. Thank you very much for joining in, Erez. I want to start first, with getting a sense of a lot of the one-offs. The quarter was really supported by, let's say, sales of generic Revlimid. You also sold off some of your brands, which kind of, added to that one-off. Give us some more detail on all of these factors that led to a good pop, at least on the top line.
Yeah, so this year is indeed a good quarter for us, in which we continue to enjoy the tailwind of new products, especially in the United States. In this year, we had a couple of impairment of assets, and as well as we did not receive actually incentives this quarter. So let's say it's a very normal quarter for us, like we had in previous quarters and likely to have in the quarters ahead.
All right, sir, we take that point on board, but how did the base business perform for the company this quarter, ex of all these one-offs?
It went well. We are actually in the growth momentum in all the markets, and especially in the areas that we had even challenges in the past. So this quarters we grew also in the API business as well as in all the markets. So in general, in FY23, all the markets performed well, and that's also relevant for this quarter.
Right. So the U.S. markets did around $310 million of sales. How much did Revlimid generic contribute as compared to the previous quarter?
So we are not giving specific numbers of the product, and what I can say that the product will continue to be meaningful for us, and may fluctuate from quarter to quarter, but it's going to continue to be big contributors to our performance in North America. And at the same time, we are ready for a launch of something between 25 to 30 products in the United States, plus the additions of the acquisition that we recently doing in the United States. So United States will continue to be a very focused area for us.
We get that point, Erez, but if you could give us some sense of the business aside of Revlimid, which is, of course, a big drug for you, because the market is trying to understand, X of Revlimid, how your U.S. business is doing, and whether there's actually some pricing pressure perhaps building in.
We do see in the United States similar models to what we did in the past. Specifically for the quarter, we had less of those competitions, so we do, in terms of impact, better performance of the base as related to price erosion, as related to market share gain. And in terms of product launches, I think the most significant piece, beside the normal launches that we are recently announced, is the fact that we started to sell by our distribution network the main products, and which over time we will launch more and more of those. Those that were already there by main, of course, we immediately are selling, but we are launch also products from that acquisition as well as our own internal products that we submitted and we launch through the year.
All right, what are you guiding for, though, in terms of U.S. sales in the coming quarters? What I'm looking for is a quarterly run rate.
As you know, we cannot give guidance. This is a policy. But what I can say that I believe that the U.S. will continue to be strong, as well as the other markets. And in general, the company is now in a very positive momentum for the last couple of quarters. and likely that we will continue to see this momentum also in the quarters ahead.
So margins have been aided by the US business divestment of brands to Erez. There will be PLI government grants as well. Adjusted margins were around 21% as compared to estimates of 23%, adjusted for all of these, in a way, one-offs. Any pressure you are seeing going forward, and what's the guidance looking like now?
We will continue to maintain that our long-term, as well as we're already there, of the 25% EBITDA as well as 25% ROCE will continue. We finished the fiscal of FY23 very strongly with the EBITDA of 30% and ROCE of 35%. So in that respect, we will have years and quarters in which we will be above it or below it. The above or below is a reflection of timing of the new product as well as level of investment, as we do want to take the money that we are accumulating and the profit that we have and invest into the future, being a very organic growth company.
Okay, and finally, the India business, after we adjust sort of the one-offs or the add-ons, it was up about 10% year on year. Do you see this kind of growth sustaining into the current year, FY24 as well?
I believe that India will continue to grow in double digit also in FY24 and also in the years after. I believe that India will grow even faster than it was in FY23. And in addition to that, we are investing a lot in building portfolio for India, both Horizon 1 as well as Horizon 2, both organic as well as inorganic with licensing in deals.
I appreciate you joining in and giving us all of those details. Wishing you all the best for the coming fiscal.